Students of accounting and people interested in accounting may have some basic questions in their mind while recording entries in journal or ledger. For example, why do we record buying of some items as purchases account debit? Or why do we not write purchases account debit when a building or machinery or say stationery is purchased? Or how to identify whether an item has been purchased by cash payment or on credit. This video attempts to clarify some of these basic questions. Hello friends, welcome to Hamsa Accounting. The learning plan for this video is to examine the differences between purchases of goods and purchase of other assets. The second point is to record each category according to the distinct way followed by accountants. The final desired outcome is to correctly identify whether a transaction relates to cash or credit. Both purchase of goods and purchase of assets apparently means purchase of assets, although goods are also assets, but there is a fine difference between the two. In its essence, goods are also assets, but while recording, these are treated differently from other forms of assets for correct determination of profit or loss of a business entity. Let us find out why goods are treated in a different way from other forms of assets. Goods mean those items which a business unit deals with in the normal course of the business. These items are bought by a business entity for further processing or for resale during the same year so that the business can generate cash. This point is explained in detail in the video Difference between Fixed Assets and Current Assets. Please watch that video for more clarity on these differences. Coming back to goods, timber is a good for a furniture manufacturing unit. This is because timber is acquired by a furniture making unit for further processing and for resale so that the business unit can earn cash and make profit. Similarly, steel is regarded as a good for a railway coach factory and paper is a good for a book publishing house. Even if a good is acquired for only resale without any further processing such as soap, detergent, etc. bought by a retailer for selling, it is also regarded as goods. Therefore, goods are items which a business normally deals with. Secondly, these are current assets acquired for further processing or for resale during the same year for generating cash and income. Goods purchased is therefore shown in the accounting books as purchases account debit. This is also essential for correct estimation of profit of the business. Assets other than goods, on the other hand, are purchased so that business can put them into long-term use. Thus, machine, equipment are bought by a furniture making unit for the purpose of using them in the business and not for the purpose of resale. So, if a hotel purchases timber or wood for constructing or decorating its building, then it is regarded as an asset other than goods, because the hotel acquired timber for using in its building and not for resale. In this case, purchase of wood or timber is debited as the concerned asset account. This cannot be debited as purchases account. Let us discuss another example. We know that a car dealer buys car and vehicles from a car manufacturer for the purpose of reselling them to car buyers. Hence, for the car dealer, buying of car is regarded as purchase of goods and purchases account will be debited. But if a car is purchased by a book publishing house to be used in its office, then it will be regarded as a purchase of assets and car account or vehicle account will be debited. As our concept is clear regarding this distinction, now let us discuss a journal entry. In our first example, we will consider the dealing of a jewelry shop. So the first transaction is Ratna Jewelers bought 100 gram of gold on 15th of April 2022 from Messrs Bullion Enterprises Limited for rupees 5,12,000 on cash. So let us see how the journal entry can be made in this case. First, let us see the reasoning part. Gold is a good for Ratna Jewellers because the entity is involved in buying and selling of gold. Good is an asset, or to be more specific, it is a current asset. Good purchased should be recorded as purchases account in the journal. Increase in asset is debited. If we follow the rule of debit and credit, increase in asset is debited. Hence, we will debit purchases account. Payment is made by cash. Now we are considering the other part of the transaction. So, payment is made by cash, which is also an asset. Cash payment decrease the cash balance with the entity, and therefore decrease in asset is credited. Hence, cash account is credited in the journal. So, what we will do, we will debit purchases account with rupees 5,12,000 and we will credit cash account with the same amount. Transaction number 2 is similar to the earlier one, except the fact that the payment has been made by a check instead of cash. So, in this case, Ratna Jewellers bought 100 gram of gold by check on 15th April 2022 from Messrs Bullion Express Limited for rupees 5,12,000. So, bank account is credited as payment has been made by check, and payment by check decreased the bank balance of Ratna Jewellers. Bank balance is an asset and any decrease in asset is credited according to the rule of debit and credit. As for the debit part, it will be purchases account debit because gold is a good for Ratna Jewellers because they deal in this item. Let us consider another example. In transaction number 3, Ratna Jewellers bought 100 gram of gold on 15th of April 2022 for rupees 5,12,000. As you can see, in this case it is not mentioned whether the payment is made by cash or check, or whether any payment has been made at all. In such cases, it is assumed that the payment has been made. If you get this type of transactions, we shall assume, or you will have to assume that the payment has been made. It is up to you now to make an assumption on the payment mode. So, you can either think that it has been made by cash or by check. So, in this case, you can either credit cash account or bank account. We are crediting bank account here with rupees 5,12,000. Even if you make it to cash account, it will be perfectly fine. In transaction number 4, it is explicitly mentioned that the payment has not been made. That is, the item was purchased on credit from Messrs Bullion Express. Since the item is purchased from Messrs Bullion Express on credit, therefore, Messrs Bullion Express is a creditor for Ratna Jewellers. We know that a creditor is a liability for the business, and any increase in liability is credited in the books of accounts according to the rule of debit and credit. So, Messrs Bullion Express is credited here. Let us consider another type of example. Transaction number 5. Here, Ratna Jewellers bought 100 gram of gold on 15th of April 2022 from Roy Gold Traders for rupees 5,12,000. Here it is not mentioned whether Ratna Jewellers purchased the item on cash or credit from Roy Gold Traders. Whenever this type of statements are given, that is, the name of the seller is shown but the payment mode is not explicitly mentioned, it is assumed that the items were bought on credit. Hence, we will credit Roy Gold Traders as it is a creditor for Ratna Jewellers. Let us consider one last example. Transaction number 6. Ratna Jewellers bought an air conditioner for office by check on 16th of April 2022 from Tulip Cooling Solutions Limited for rupees 68,000. It is evident that Ratna Jewellers is not involved in buying and selling of air conditioners. The item is bought so that it can be used in its office. Therefore, this cannot be regarded as goods for Ratna Jewellers. So, we shall not write purchases account debit in this case. We can debit air conditioners account or electrical equipment account because buying of such items increases the asset for the business and any increase in asset is debited in the books of accounts. Since the payment has been made by check, therefore we will credit bank account as payment implies decrease in bank balance. Bank balance is an asset and any decrease in asset is credited in the journal. I hope these examples have clarified the matter under our learning objectives for this video. Thanks for watching. Please like and subscribe for more such videos and stay connected with this channel, Hamsa Accounting.